Hello everyone and welcome to Day Trader S&P 500. It is Saturday, December 6, 2025. This is Dale Woodson, editor of Woodson Wave Report and this YouTube channel. As always, we want to get our YouTube subscribers caught up with our newsletter subscribers. We have a lot to cover today, so let's get right to it. Okay, here we have the U.S. 10-year bond. Let me make that bigger so we can see the whole thing. Okay, we have a wave 3 high with a circle around it here. Okay, the theme of this might be fourth wave triangles. Like I said, I learned Elliott Wave on a fourth wave triangle by mistake or by luck back in 1996, and hard to get one by me. But anyway, on the bonds here, we have an A down, a B up, a C down, a D up, and an E down for a fourth wave contracting triangle with lower highs and higher lows. There's the contraction there. By the way, notice all the direct hits: 1, 2, 3, 4, 5, 6, and hopefully we'll get more. Love the bond market and love trading it. But anyway, and that's in the auto trades, which we'll get to later. But out of this triangle, we're looking for a thrust higher out of the triangle as usual. All right. And so far so good. We have triggers and targets, and our triggers are becoming our targets. So this is the trigger from the E wave low, and that's our target there, the D wave high, which is 4.627%. Once that target is achieved, this becomes the next target, okay, and this becomes the trigger. So we're looking at the B wave high of 44.809%. Once that is achieved, then this becomes the trigger and this becomes the target, which is 5.021% back in October of 2023. That is the wave 3 high, and wave 5 should go above wave 3. Okay, so probably a little ways off on all that, but our parameters are set, and this E wave low here should hold for the bond market. Okay, let's escape out of that, and let's get to, what do we want to get to here? PLTR, there it is. Nvidia, we'll get to that one too. Here's Palantir. Let's go back to the April low. There we go. Let's get this full screen too. Okay, and from the April low we have 5 waves up, and let me get out of this and see if I can get a little, well, we'll draw it in there. Okay, so we can call this, get this out. That would be an A wave down. Bear with me here. That would be a B wave up, and that would be a C wave down. Okay, so C equals A here at 141.84. The 50% retracement is just above at 144.06, and the low so far is 147.56. Okay, so we'll see how that plays out. Again, this could be a series of 1s and 2s, 1 down where A is, 2 up where B is, 1 of a lesser degree of trend here, and then 2 up. That is broken with a move above the B wave high. For now, we're calling it an ABC, but we're open to the 1, 2, 3, where it could be a 4 and then a 1, 2 and a 1, 2. We'll see how that plays out. That would have to break way below the C wave low to be a 5 wave to the downside. It's possible, and it's on the table. Okay, let's go to Nvidia. Similar situation. We're looking at from the, let's see if we can get there. There it is, the April low. By the way, that was 88. Now it's at 1 over 200. And we have the same exact scenario. It looks a lot like Palantir and Nvidia look the same. We got an ABC. It's next to the 382 retrace, which is 164.22. C equals A at 166.96. And that low there is 169.55. Same scenario, you know, ABC, it could be a 1, 2, 1, 2. We got to watch how that plays out, but those are both on the table. Let's get to Tesla. There we go. I want to show you guys the history of Tesla if I can. Let me get out of this because there's so much going on. There's so much volatility, so much up and down, so many 786 retraces and all that stuff. So let's just show you. You can see how high and low it goes. Again, theme is fourth wave triangles. You can identify a fourth wave triangle. You can work your way backwards. If that's 4, then that's 3. Find 1 and 2. Okay, from the pandemic low, we have, there it is. It's off a little bit because we scrunched out the screen. But we have a 1, 2, 3, 4, and a 5, all the way up to 414 in November of 2021. Okay, that's a 5-wave pattern. And then if I can scrunch that down, this was a 786 decline. ABC, 786 decline. Okay, and then we had another, see if we can get this in here, 5 waves up, which subdivided, and we had another 786 decline. There's one at 1 degree of trend, and we had a 1 up, and there's a number 2 at a 786 decline. If you can get in on these 786 declines, the risk to reward is unbelievable, because the risk is it can't wipe out, this 2 cannot wipe out more than all of this 1. Okay, so that low there is 101.81. It can't go below that or it's wrong. You always ask ourselves, where is it wrong? On the charts and the trades. Okay, so that 2 is good as long as it holds above that low at 101. So your risk is 28 points to the downside. And your upside was 488. That's 350 points to 38. That's unbelievable. That's 10 to 1 risk reward ratio. Those 786 declines are great entry points because your risk is low. Okay, from there we had a 3. All right, now we're looking at a 1, 2, and a 3. 3 in the black. Okay, 3 is equal to 1 at 426.67, and it equals 1.618 at 521.51. Okay, so those are upside targets there for Tesla. Obviously, this wave 2 low at 273.22 should hold, and I don't think that's a 786 retrace, but now I'm just curious what it is. Okay, let's get a retrace on here. Doesn't look like a 786, but you never know. Let's get that magnet on. There we go. And it's right on the 618. Okay, very good. Tesla likes Fibonacci just like everything else likes Fibonacci's. Okay, anyway, that's it on Tesla there. Okay, obviously bullish on there. Let's go to Bitcoin. By the way, Tesla, Bitcoin, the SMH, and the XBI are part of our video on demand. I update that every month. I can show you guys here in our subscriptions. And there they are there. There's the video on demand. That's updated every month. Okay, we're on Tesla and we're going to Bitcoin. Without further ado, here we go. Okay, let's make this bigger, make that bigger, and make it even more of a full screen. Let's get the whole picture in here because there's a lot on Bitcoin, a lot going on. If we can get to the beginning of that. Yeah, from the pandemic low. Everything starts from the pandemic low, doesn't it? We have a 1 up, a 2 down, and then a 1, 2, 3, 4, 5 for wave 3 over here. Came pretty close to the target, 109,000 and change to 108,000 and change. Then we had a 4th wave decline. This 4th wave decline held above the wave 1 high of 69,000 at 74,434. Okay, it's right between the 3. Well, anyway, we'll get to that. That's for the next. Okay, so we have 5 completed waves up here. Maybe it'll go higher. 5 equals 1 right there at 137,461. Currently the high is 126,272. It could go higher, but this here should hold above this 4th wave low at 74,434. Okay, this still could be an ABC and go lower. We'll see how that plays out. Okay, because if that 5 equals 1 up here, but the minimum requirement of 5 is to go above the wave 3 high, which it has here. So if it's a completed 5 waves, then it'll come down to these retracement levels here, which it practically has. There's a 79,861 for the 382, and the 50% is 65,524, and the 618 is 51,188. And there's that fourth wave of a lower degree of trend, and all those except the 382 are within that fourth wave, the 50% and the 618. Should be strong support, definitely here, and probably here. We're going to see if that plays out and that 5 goes higher. It seems to always do so we'll see how it goes. And let's get out of Bitcoin, and we're going to go to our other video on demand, our third of 4, SMH. Here we go, the VanEck Semiconductor. Let's make this bigger also. Let's go there, and let's go there. Let's see what we're looking at here. Okay, these things are a little bit crowded. Maybe I can make it better here. Okay, from the pandemic low, we have a 1 up, a 2 down, and then we've got a 3 up over here, 4 held above the wave 1 high. The low was 178.23, and it had to hold above 159.41, and it did. And look at the payoff, wham, there we go with 5, and it's actually above the 1 and the 1.618. So we might have to look at that as a third wave extension, okay, because that really did some stuff there. Let's see if we can get this on to 2. If I get it on there. It's not exact. I like to be exact to the penny, because there's math. There we go. Yeah, and that 3 is over the 1.618, but then again, the 2.618 is right here. So let me just type that in, because that 3 could have extended. Let me get that down and put new verbiage up here. That is 358.55, 358.55 equals 3 equals 2.618. There we go, and that could go nicely right there. Okay, that's if 3 extended and went up here. It's possible, very possible. In fact, the more I look at it, the more I like it. So we'll check that out. Got it there for future reference. Okay, let's line that up, and let's get out of that and get out of that, and let's see. We went from SMH. Let's do the XBI next, the fourth of our 4 video on demand subscription services, or things to calculate. It's all math. Okay, we got this from the 2022 low. We've got a 1 up, a 2 down, and then a 1 of 3, a 2 of 3, and a 3 of 3 up here. Okay, this is interesting because this 61.78 barely held for wave 2. 2 cannot retrace more than 100% of 1, so 61.78 had to hold, and it did, barely. Okay, and then we have this one at a lower degree of trend, or smaller degree of trend, and this 2, and this 63.80 had to hold for this wave 2, and it did. 66.66. These are got to be way more than 786 retracements, which is even better than a 786. Let me see if I can hone in on these here. That's not exact. Yeah, it's definitely more. I know it without looking, obviously. Let's get this one up here, and this one over here. Go there. Yeah, and there's a 7. Yeah, see, so these things are, those are unbelievable entries. An entry here gets you from 63 to that's not quite on there. There, to 105. That's a nice gain. And your risk here was 2 points, and your reward was 40. Okay, that's 20 to 1 risk to reward ratio. You'll take that anytime. Here we've got a 2 down. This held by what? Not even 3 points. And so far you're up at 124. So you had a risk of 3 and it doubled basically. You got 60 points. So 60 to 3, that's 20 to 1. Unbelievable risk to reward. You get a 786 retrace, jump on it because your loss is going to be small. You get more than a 786 and you're just doing cartwheels. Okay, so our target here, 3 equals 1.618 at 118. So far the high is 124, and you can see here next target is 133.68. okay, again, we update these monthly in the video on demand subscription service. I believe it's a Fibonacci 55 or $89 a month, and we update those once a month. Okay, so let's get out of that. Let's go here, and we want to get into the long term of S&P 500. Okay, there we go. This goes back to the 2009 low, 58% drop from the 07 high. And then we have a 1 up in parentheses in purple, a 2 down, a 3 up. There's that fourth wave triangle again. You're not going to sneak one past me after all these years, after learning them in 1996. Well, that's about 30 years. Geez, I'm going on 30 years. Anyway, started the newsletter in 97, so maybe we'll do something special for 30 years in 2027. Anyway, there's the wave 4, expanding triangle, higher highs, lower lows, and then from there we have a thrust higher at a 1, 2, 3, 4, 5. 5 equals 1 at 74.52. This is a monthly chart. It's a log chart. Long-term chart should be log scale, short-term or arithmetic scale. Okay, and again, the job of wave 5 is to get above the wave 3 high, which it has. Ideally, it equals 1. So there's our 74.52 target, and there's our high so far, and it's creeping up on crossing over that high, but we'll get into that a little bit later on the shorter term. Let's move from the S&P to the E-minis, and we want to look at the hourly chart here. There is a lot going on here. I don't want to confuse you guys with too many things. I think I also have this on our report. But this is our Fibonacci time spiral, these dates up here. And from the highs, marking alternating highs and lows. I put the dates on the top so you can see. The first spiral date caught a low, then a high, then a low, then a high, then a low, then a high. The slippage on this is, I think the last one was 2 or 3 days. I think the turn date was 12/2. The other ones are within 1 day or less direct hits. Okay, the black wave count here is a 1 down from the all-time high and a 2 up. Okay, this 2 up cannot go above 69.53.75. Okay, so that's what we're looking at there. And there is the 786 retrace. And this is just the line for the, I'm going to move that over because the market didn't go there. There, the market went here, 69.0500. Okay, on Friday, yesterday. Okay, so the blue count here is the bullish count, and it labels this decline as an A down, a B up, and a C down, and is over. That's the bullish count. And then we've got a 1, 2, 3, 4. I saw this 4 in the middle of this week. I guess this week's still going on since it's Saturday. Oh, there's a 4 again. Hard to sneak a 4 by me. So that's an ascending triangle with a flat top and an ascending bottom. And we always get a thrust out of a triangle. So far, so good. It went to 6,900. For the bull case, this should go past 69.53 and hit 70.24. Again, that would be 5, that little blue V. And all 5 has to do is go above 3. There's the little blue 3. And so far it has. Ideally, in a Fibonacci perfect world, it gains equality with wave 1, and that target is 70.24. So a lot going on there. A lot of triggers are activated and targets achieved to the downside. The bullish count shows this complete in blue at that low on 11/21 of 65.25, and wave 5 up to new all-time highs. The bearish count shows a 1 down with a circle and a 2 up, which would be a great shorting opportunity considering where is it wrong at 69.53. So you're looking at less than 50 points to the downside. 50 point loss. Less than 50 point loss for the bears to short this above the 786. It's 786 plus. And all right, so we always ask, where is it wrong? If it goes above 69.53, then this 2 is wrong. Okay, that's 50 points, 52 points. Okay, if it's right, 2 will go definitely below 1. Okay, I'm sorry, 3 down will go lower than 1, and that's 65.25. That's almost 400 points. So you're looking at 50 point loss to 400, and it's going to be more. We could do it. Let's do it. Let's see if we can just figure out what that's going to be for a target. And that's assuming that this 2 is over. It may not be. It might not even be correct. But let's nail these on here. Let's put this right on that 6,900. There it is, 69.05. So 3 would equal 1 at 64.76, and a more normal relationship is a 1.618 at 62.11. Okay, so you're looking at 700 points down with a 168. 700 points, and your risk is 50. That's absurd. Okay, so it's a small risk to reward. Of course, it could go up, but obviously, you know, where is it wrong? Above 69.53. You get short, you put your stop above 69.53, and your reward is huge. Okay, so of course that won't happen overnight, but it's, I love these 786 retraces. Okay, I think we've covered all of that. Let's see what else we have for you guys here. Oh, I want to show you our monthly report. Let me get out of all of this and get into the December monthly. There it is. Let's go up top to bottom, show you guys all of this. Okay, monthly report that was put out Friday. There's our auto trades, financials, bonds, ES, and E-minis micro, the micros. Okay, there's all of our trades. Most recent trades. This one goes back to 9/17. Look at, I want to show you guys, look on the right. Obviously the black is gains and the reds are losses. And watch this play out. Look at all these losses, okay? But then look at the gain, 6,665. You know, our number of losses is greater than our number of wins. However, our discipline to our money management system enables us to enjoy a good sized profit. I kind of skimmed over this, but what you need is, I think I have it here. Oh, there's our, I'll get to it because I think it's coming up. Okay, auto trades, you don't have to sit there and watch the markets and charts all day. That's what I do. Okay, and there's our most recent ES top 10. We're in 8th right there. And here's what I wanted to get to. The system is auto trades. I am the developer. Trading system, I use obviously Fibonacci extensions, Elliott Waves. Everyone needs a trading system. It doesn't have to be this one. This is the one I choose. You can choose whatever one you want. Okay, but more importantly, you need a money management system. I'm using the Ryan Jones fixed ratio money management system. It limits our losses to 5% of the portfolio and builds on our gains. As you can see, our losses are way more in number, but way less in amount. Okay, and you have to have a trading system. More importantly, you have to have a money management system, and most importantly, you can have the systems and still lose because you don't have the discipline to stay within those systems. And that's where this comes in right here. Okay, we have way more losses than wins, but we have a profit because we're staying within the system. That's why I said, I've said this before, that the military people and professional gamblers make the best traders because they're used to staying within a system. Okay, so that's it on all those. And you can do the auto trades. Here's all the contact information there. There's our most recent testimonial where Joe here, you can read all his nice words. Thank you, Joe. Appreciate all of your kind words. Feel free to raise your rates. I'm a customer for life. I'm sure our paid subscribers don't want to read that, but oh well. We have a lot of testimonials. Here's his snapshot. He shared with us 54,260 profit losses for the day. Okay, there's his trades, and there's our disclaimer. Okay, you guys can read that. Yeah, I'm not a futures broker, but Striker is, so I give my trades to Striker and the auto trades, and they trade them for you in your account that you open with them. Okay, without further ado, again, the S&P 500 big picture. I think we went over this on the chart. That's a little redundant. Okay, so we don't need to go through all that. We went through this already. That is the well, this is on the cash, which is the same as the futures, except it's different numbers. Okay, so we don't have that in blue here. The bullish count, we have it in black. All right, so there's our Fibonacci turn dates, and what I did was I put these turn dates up here on the chart, like I did on the ES, the futures. Okay, so it's catching alternating highs and lows. The first one is a low, the next one is a high, the next one is a low, the next one is a high, the next one is a low, the next one is a high. So far, it's got the most slippage, which is 3 days. If it gets much further out, then that bull wave count is going to win out. And this, all these spirals end at some time. The very first one I did lasted 7 years, from 1999 to 2006. It caught almost every high. I started off on a daily, then went to hourly, then went to, we started off daily, went to hourly, and went to monthly. And I'll have to show that to you guys, because I know I have it on this, not right here, but I have it. I'll show you guys someday. But that's what got me started on it. I started on these Fibonacci time spirals in 1999. So if this keeps playing out and this holds, I might give it 5 Fibonacci days, 8 at the most. Then we're going to say it's worn out, it's welcome, it's done, and move on to the next one. Okay, there's our verbiage on the next one coming down to 10 minute, I believe. Okay, yeah, bullish wave count, hourly black. Here we go. All right, this is from that low. We've got a 1, 2, 3, 4, and on the 10 minute shorter term, 69.48 is a target. On the hourly, you had a higher target. And this Fibonacci time spiral from the May 23rd low has caught lows like crazy. And the next target date is January 11th. So we'll see how that plays out. The slippage on this is anywhere from 1 to 3 days. So looks pretty good. Catching consecutive lows. That's 1, 2, 3, 4, 5. The next one will be 6. Changes needed for a change. Steps needed for a change in trend. We got that. Okay. We went to a short term on the ES. We never did it on the S&P cash, because this is a longer term view. The ES, I put out daily reports. On this one, I put out monthly reports. So with this annual subscription with monthly reports is longer term based. Okay, so that's all that with the circuit breakers there. And going from longer term to shorter term, I want to show you guys. I changed the date to the 8th, but this was Friday. I'm getting ready for Monday. I always work ahead. Again, there's our auto trade systems. There's all the information we already went over. That's all that. There's all those trades. There's the ranking. Okay, there's that. We did that. Disclaimer. Here's the thrust higher out of the triangle from that 1121 low. We're looking at a 10-minute chart. We have a 1 up, 2 down, 3 up. The value of identifying a fourth wave. I caught this, like I want to repeat, in the middle of the week. Maybe it was Wednesday, maybe Tuesday, Wednesday, Thursday, somewhere in there. I saw this is a 4. Should be followed by a 5. Here we go. That's the 7022.75 target for 5 on a 10-minute chart. This is from the monthly subscription with daily reports. Okay, hope that's not too confusing. There's those Fibonacci turn dates. There's a typo. Now it's gone. Okay, and where's the count wrong? That was with the 6900. It was achieved. That's when we had multiple second waves at different degrees of trend. Here's where we switched on the short term. There we go. We moved to a short position as wave 2 up appeared complete on the 14th against the all-time high, okay, of 69.53. We'll resume a long position when it gets above 69.53.75, if and when it does. Those are the same spirals. Those are the same circuit breakers. Okay, so let's leave you guys with one of these charts here, and yeah, this one's busy. Okay, but we're gonna, I like this one. It's got so much information here. Let's get that there. By the way, there's our trigger right up here, and it's 69.05 high. We're gonna see how this plays out. There's a lot of information here, a lot of time value, and a lot of price, and it's a bullish count and a bearish count. And we'll make that a little bigger. There we go. That 12.5 has to sneak over there because of our size of our chart. There it is. It's back in its place, if you will. Okay, this is what we're looking at. A lot of information to digest here, so I think we've explained it all. So you guys have a good rest of the weekend. We'll talk to you again next week. And until then, take care, everyone.